There's a couple of notable things to observe about the UK tax system. One, the onus is on the taxpayer in the vast majority of cases to declare to HMRC what their tax situation is. This is under the rule of what's known as self-assessment. And number two, ignorance of the law is no excuse. There is a third tenet I'll just throw in for good measure, and that is the taxpayer assumes a lot of responsibility for knowing and understanding what their tax situation should be. Now, that could be palpably unfair if we imagine the volume of tax legislation that exists in the UK, let alone outside of the United Kingdom. That's a big responsibility. In this week's I Hate Numbers video, I'm going to outline 3 areas where a taxpayer, whether it's an individual or a business, may have actually overpaid in tax, and there are opportunities to make good and get some tax back, and certainly reduce your liabilities going forward. Now, firstly, let's consider the idea of where the responsibility lies and how it can impact on a huge amount of taxpayers. Let's take into account the tax code. Now, an individual, if they're in work, i.e. under what's called PAYE, which, by the way, was introduced in 1944 to ensure regular tax revenue for the government. When that system was introduced in 1944, we evolved a system of what's called tax codes. Now, the way it works is as follows. An individual in the United Kingdom is entitled to something called a personal allowance. Under current rates for the year 23-24 and beyond, is £12,570. Now, if you are in work or you are in receipt of a pension, a private pension, then what will happen is HMRC wants to make sure that you're paying the tax as you go along. They don't want to wait an age to collect that tax, so therefore for them, it's easier and much more effective to collect that tax as you proceed. So if we take that single personal allowance of 12,570, what would happen is we chop off the last digit and we add the suffix L. And that L indicates a lower tax earner. It's a bit of an archaic piece of legislation and nomenclature, but that's what it is. Now, what happens is that tax code is given to employees during the course of the year on a monthly or weekly basis, if that's the frequency of pay. And therefore it says, as you earn money, that is the amount you can earn tax-free, approximately over £1,000 a month, the equivalent being approximately £250 a week. Anything over that, you pay tax at the appropriate rates. Now, here's the kicker. Unfortunately, there are a huge amount of tax codes out there that are actually incorrect. And it's not HMRC's responsibility or your employer's responsibility to know what the correct tax code is. That is the responsibility of the employee. The first thing I would recommend to everybody out there is make sure your tax code is correct. If you check the notes, you will see a link to a tax code checker. Dive on, check the tax code, and here's the Brucey bonus as such. You can go back up to 4 years to do any adjustments accordingly, and that might mean that if you've had the wrong tax code in existence for a long time, you can apply for that code adjustment and you should have a refund coming its way to you if you've ended up paying more tax than you should have done. Now, we're just in time at the time of publication of this particular video to go back to 1920, but remember, you've got 4 tax years you can claim back, and that could be a nice little windfall itself. You can quite easily do that yourself, or if you've got an existing accountant or advisor, talk to them and they can help you out with that. So that's scenario number 1. What's the second one? Well, the second one is what's called the marriage allowance and the transfer accordingly. And this is how it works. Now, first of all, you've got to be married or in a civil partnership, and it's critical that one of you does not pay tax. Doesn't matter whether it's which party it is. One of you doesn't pay tax, and the other party is paying tax at the basic rate. Now, basic rate tax currently is 20%, and that applies where your total income is up to and including just over $50,000, $52.70 if you want to be precise. Now, if one of you is a basic rate taxpayer and the other party isn't paying tax, and it doesn't matter what the other party does, they could be a volunteer, they could be a student, they could be somebody who's retired, doesn't matter. Now, what happens is you are allowed to transfer 10% of your personal allowance across to your partner. Your partner then receives that additional allowance on top of their existing personal allowance which means they will end up paying less tax and you effectively aren't going to be any worse off because you're not paying tax in the first place. Now that transfer, by the way, is a fixed amount. You can't vary it such that it maximises your situation. Obviously keep on top of the situation, because if you have transferred your allowance but your circumstances change and you start paying tax, then obviously it's going to make things a little bit more awkward. So you've got to keep on top of it, but you can also do a retrospective claim, and it could be worth as much as 250 quid in a year, which is not bad. And remember, you can go back and make a prior year claim. So we've done 2 so far. So we've looked at tax codes. Please do check. There are millions of people who have got the incorrect tax code. It's not the responsibility of your employer or HMRC, it's your responsibility as an employee. Number 2, we've talked about the marriage allowance. So what's the third one? The third one is if you are a freelancer, if you're self-employed, and you may have incorrectly claimed expenses, or you may have not claimed expenses you're entitled to. So whether that's working from home, telephony expenses, travel costs and the like, you can go back retrospectively 4 years and make those adjustments accordingly. And what that means is if you previously paid tax and you've realised that you haven't claimed the expenses you're entitled to, you can make that claim, and that means it can rework and you get a nice little bonus. Now folks, that's 3 ways in which you can review your situation, claim back the tax that you might have overpaid, which is not a bad thing. And I think that brings to me a couple of concluding comments. Number 1, make sure you do a regular health check on your taxes. If you're not used to looking at these things, look at your payslip. What does it say on there in terms of the code? Does it look wrong? Does it look odd? A lot of us quite naturally will assume that everything is in order, but it's not always going to be the case. Talk to your accountant, talk to your advisor if you're not quite sure. If you haven't got one, a lot of these claims can be done by yourself on a DIY basis. It doesn't need to cost you a lot of money, but please make sure everything is in order. Now, this also applies in a business context. There are other reliefs that you may be entitled to as a business. So whether you're in the creative industries, whether you're a corporate entity, a private limited company, whether you're another type of business, make sure you're claiming all those allowances that you're entitled to. Doing a regular health check for tax is always a good thing. Tax is a cost, whichever way you carve it up. And thirdly, be aware of fiscal drag. I've talked about it on previous videos, and fiscal drag is where you're going to be dragged into another tax bracket because your allowances are not keeping pace with inflation, they're not indexed upwards, so you could find yourself moving into a higher tax bracket and pay more tax. There is a squeeze on at the moment. We are proportionally paying more tax than we have done for quite a long time, so it's really important that we keep an eye on these things. Folks, I hope you found this useful. If you have, I'd love it if you could share it with those who will benefit. Until next time, look under the bonnet, check your personal tax situation, and if it's not quite right, then do something about it. Until next week, folks, happy checking.